Now, moving on to part 3, I would like to compliment Business Standard for this wonderful line, which I use. India's growth story sits at the intersection of global headwinds and domestic potential. Exactly, well captured. So far, we have seen the domestic potential and priorities. We are going to now see the global headwinds. What is unfolding in the world today and why? If you look at the 5 bright pink boxes, this fund manager has predicted it in 2020 that the world will face populism, trade wars, financial repression, military conflicts, and negative real yields. And he doesn't trace this to specific personalities, he traces it to the kind of policies we adopted since the global financial crisis and the quantitative easing and ultra low interest rate policy that was set in motion in 2008. So in other words, personalities are not the reason why the world is today looking at trade wars, military conflicts, and populism with negative real yields and financial repression to follow. These are products of choices that were made some 15 to 18 years ago, and therefore the train has already left the station with respect to these consequences, and they will be with us for the next 5 to 10 years as well. And that is something we need to take as given when we look at our own policy options and priorities. Therefore, geopolitical tensions are inevitable, and they have led to decadal level highs in global economic uncertainty. The uncertainty index reached historic highs when the reciprocal tariffs were announced, but still they are much higher compared to where they were at the turn of the millennium. And reflecting that is the price of gold, which goes up by more than $100 to $200 per ounce every day. So in other words, gold is not only responding to global uncertainty, but also the question marks arising with respect to the store of value of fiat currencies around the world. So therefore, what is going to become in this era of easy money? The problem is this era of easy money, which was there from 2008 onwards, which also resulted in high inflation in 2022 and 23, has resulted in a very expensive stock market, almost reaching the highs before the tech bubble burst in March 2000. Concentration risk even more than what we saw earlier in terms of few companies having a very high market cap, and financing of the global financial capital coming from non-banking sources rather than from banking sources which are better regulated. And if you look at the circular financing that characterizes many of the AI-related investments, you will understand that this can be a sort of a trigger to unravel the global finances. Therefore, we look at 3 possible scenarios for 2026 and maybe somewhere in 2027. It's very difficult to be precise about the timing. Scenario 1, business as usual in 2025, continuing this year, but with less security and more fragility, and we attach a 40 to 45% probability to that. It is disorder, but managed disorder. Scenario 2 is a worse version of scenario 1, and that will result in sharper trade-off for emerging economies, including India, between autonomy, growth, and stability, and supply chains will become even more politicized. Scenario 3 is the worst of them. It's a systemic shock cascade. Leverage AI infrastructure, which we spoke about earlier, will expose fragile business models. Financial, technological, and geopolitical shocks amplify each other and feed into each other. And this low probability but high impact outcome will have macro risks even exceeding those that we saw in the wake of 2008. This is the kind of world scenario that we are facing. Therefore, given this world scenario, but given our stellar domestic growth performance and prospects and priorities, how do we therefore prepare ourselves to drive our development Viksit Bharat agenda, and that is section 4. Why Swadeshi matters? Because the nature of the global system has changed. Trade is no longer reciprocal. Markets are no longer neutral, and supply chains have become instruments of state power, and we have seen them in several examples across the world. And therefore, Swadeshi is a legitimate policy instrument in such a world. Countries have to take care of their priorities, and therefore we should not be squeamish about swearing by Swadeshi in this kind of global environment. The conundrums, however, emerging markets face is this. There is going to be a resource crunch, which is reflected in the price of copper. And in the last 1 week, even crude oil prices have begun to firm. So we need to create buffers, whether it is fertilizer, base metals, crude oil, pharmaceutical ingredients. We need to have buffers because supply chains can be disrupted at any point in time, as we saw in the 3 global scenarios. And the other thing, apart from building up buffers, which we need to import in many cases, we also have to appreciate that as the economy grows, per capita income rises, imports will inevitably rise. This is a given. This chart here shows you China's per capita income growth going from nothing to $12,000 in the last 50 years or so. Simultaneously, imports have grown. We look at China as a major exporting power, that is true, but it also imports a lot, 3.3 trillion, including services. So similarly, India going from $2,500 per capita to $20,000 per capita in the next 25 years will also see its imports rise. Therefore, means we have to export or attract capital to pay for it. That's also inevitable. No matter how successful we are with indigenization, this is something that economic history tells us is inevitable. And therefore, currency depreciation that we are witnessing today isn't something unique to India. Countries which have a current account deficit have seen their currencies depreciate. If you look at the performance of currencies since the millennium began, the Indian rupee actually has done quite well. And the performance even since COVID, India is in the same ballpark, not an outlier. So we need to get the breathless headlines about the Indian rupee into perspective. Therefore, at the same time, since we have aspirations to become a major global player, and naturally currency strength and stability is associated with economic rise. But how do we get there? And that is where this survey focuses on, saying that manufacturing strength is a precondition for achieving currency stability and strength. A strong growth in manufacturing exports leads to improved current accounts position, leads to forex reserve accumulation, and therefore gradual strengthening of currency credibility. If you look at today's countries, which are synonymous with stable currency, Switzerland, Germany before the euro happened, Japan, Korea, Taiwan, Singapore, all of them have a significant manufacturing presence. So achieving manufacturing competitiveness and goods, merchandise goods export growth is critical to to pursue the goal of currency stability and strength. Similarly, the other advantage of doing manufacturing and manufacturing exports is that will pave the way for lower cost of capital. We see a lot of articles in the media and commentary that India's cost of capital is high, it has to come down, and financial deepening is the answer. No, financial deepening is secondary or auxiliary to achieving cost of capital compared to manufacturing and export surplus. And we have discussed and provided the empirical basis for this in the chapter 3. Productivity-led manufacturing expansion leads to sustained export growth. That in turn turns the current account deficit into a surplus. Currency stability occurs. That lowers the exchange rate depreciation risk premium, leading to a durable decline in capital cost, which further drives manufacturing growth. That is how the virtuous circle gets formed. And therefore, financial deepening matters, but not as much as manufacturing exports matters for sustainably lowering the cost of capital. You can read the analysis in chapter 3. Now, these 3 elements, indigenization, leading to strategic resilience and strategic indispensability, are the 3 pillars of investment in national strength. So we have to indigenize, there is no doubt, Swadeshi matters, but we have to move on from that to strategic resilience, being able to withstand external shocks, and third, making India irreplaceable in key global value chains. In other words, we have to start with making things at home competitively. In August 2025, in his Independence Day speech, the Honorable Prime Minister said, "Dam kam and dam zyada." In one sentence, he actually has captured the essence of export competitiveness: good quality at affordable prices. So can we make things at home competitively? Second step to that is progress from there to strategic resilience. Can we keep functioning if the world breaks down? That is resilience. And the third step in the process is, can the world keep functioning if we break down? If the answer is no, then we have become strategically indispensable. And that is the goal we should be looking at in the current geopolitical and geostrategic compulsions that we are facing. Therefore, what should the state do to achieve strategic indispensability? What should the governments do in the country, union and states? Pursue Swadeshi ecosystem first reforms: deregulation, whole of government approach, manufacturing cluster-led growth, input cost reduction. It is not just removal of inversion of custom duties, but also eliminating cross-subsidization with respect to freight and power cost, etc. Boosting competitiveness, world-class and reliable infrastructure, long-term policy stability, building the talent ecosystem, and more importantly, when we give protection to our industry from import competition, we have to link it to productivity and export performance. That is what Northeast Asia did better than any other country in the world.